Hi, my name is Scott Gibson with Beneath the Surface. I'm here with Mickey Fulp, mercenary geologist. Thanks for being with us, Mickey.
It's always a pleasure, Scott.
Now, we've talked a number of times in the past. We've talked uranium, and what I want to focus on now is gold, and more particularly the gold stocks, as indicated by the Toronto Exchange. Talk a little bit about what's occurred on the exchange over the last year and a half.
We hit a high pre-PDAC in early March of 2011. It's been pretty much downhill since then. We had a lot of private placement paper come out during that time. We had professionals kind of front running the sell and may go away adage. So the market for most of the last year and a half has been on the downtick, and we very much knew that this summer, that it was not going to fare well, and indeed it went from a high a little bit above 2,400 in March of 2011, hit a low, if memory serves, 1187 this summer, and as predicted, we had a rebound post-Labor Day.
Yeah, and there's not a lot of financings that have been happening, but the window opened here in September into October for financings to happen with these small cap mining companies. What's your take? Is this run over? What's coming forward, and what to look for in the short term and medium term?
Well, I think we look again at the venture index, which serves as a good proxy. It hit a low of 1187. It's gone up almost to 1350. It's settled into a range in the low to mid 1300s, and what we've seen post Labor Day, we saw what I would refer as the smart money started coming into the market again. So you see some of the big boys that have been around a long time in our business are starting to participate in private placements. That's very encouraging, because there was no money to be had for probably a period at least 3 or 4 months from the late spring into the late summer.
Well, some financings did get done. There's a lot more companies that will need to finance, but the stocks are down, some of them 80%, more or less, going back over the last year and a half. There's a lot of paper losses out there. What's your take on what might we be expecting?
Well, paper losses are going to generate tax losses. Although the markets as a whole have not done well, there's been specific stocks that have done very well on discoveries or just reaching major decisions points or toward development of a mine perhaps, or whatever. So what we will see is tax loss selling. I think we've seen that come into the market. The post mid-September high, and then the markets have kind of drifted lower, and probably some of that has to do with reluctance to come in because of the pending U.S. elections, but I think it also has to do with people tax loss selling early. In my instance, I've had some significant capital gains this year, taking profits from some of my high flyers, and I intend, now being an American citizen, both short-term capital gains, assets held less than a year, and longer term capital gains taxed at different rates. But I intend to tax loss sell a few dogs in my portfolio, things that don't have a prayer, I think, of recovering in any due time. I'm going to sell those, and I intend to end up with zero capital gains this year.
Nice.
And I'm going to do that very soon. In fact, I'm in the process of doing that right now.
And where's the opportunity in and amongst this tax loss selling for your typical investor or for yourself?
Well, in my mind, then the opportunity arises in early to mid-December, when the tax loss selling is ending and it's beaten down some of your favorite stocks. So here's a strategy. You could sell something at a loss now, and in both U.S. and Canada you have the 30-day wash sale rule. Well, you can go buy it and back in and buy that stock again if you so choose. So
potentially at a lower price.
At a lower price. So I'm looking at that early to mid-December, even at times mid-December to December 31st, as times when buying opportunities certainly exist for fundamentally strong stocks. It doesn't have to be a post-wash sale sort of thing you're doing, but there's still a lot of stocks going to get beaten up. And from that point of view, those become very good buying opportunities at distressed prices.
Makes a lot of sense. And what are some of the companies you're looking at, specifically in the gold space right now?
Well, and I'm not going to talk about tax loss sales in any of those because these have been very well performing stocks or have held their value all the way through. I cover two stocks in gold space, and that's Brazil Resources Inc. It IPO'd at $1. You could have bought that stock this summer at 71 cents, but it's trading around $1 right now, and so it's held its value. Its average trade since inception of May of 2011, or let me back up and say, I think it wasn't May, it was July of 2007 when it went public. And it has average trade is something about $1.20 during that period of time. So it's a company run by the same people that ran Uranium Energy Corp or run Uranium Energy Corp. It's held its value and is building a significant gold exploration and development company in Brazil. Another company I've been involved with for quite some time is Mawson. We bought Mawson in November of 2010 at 97 cents. 7 days later was a $2.68 stock. So using my philosophy, my subscribers would have taken all their money off the table and played with half. That stock is trading at about $1.25 now. Significant bonanza gold grade discovery in northern Finland. They actually dividended out 2 spin-outs this summer, essentially a 20-cent dividend. So now we're owners of 3 stocks. It's a very well-run company, same people that run Tasman, and another of my favorites, which is Flinders Resources, the most advanced and the best graphite play out there, Central Sweden. I was there about a month and a half ago on a fast track to production. Last private placement, which I participate in, at $1.70, now trading at $1.30. That might be a buy at this stage because we fully expect them to be in commercial production sometime in late 2013, early 2014, on schedule, within budget, all the money raised needed to put the mine in production. It's a wonderful story.
Nice. I don't own those 3 companies. How about yourself?
I own them, and they are paying sponsors of my website, so I am horribly biased in this regard.
Make sure the full disclosure is out there.
Absolutely.
Thanks very much for being with us, Mickey.
All right. Thanks a lot, Scott. Always a pleasure.
Again, that's Mickey Fulp, mercenary geologist. My name's Scott Gibson with Beneath the Surface. Thanks for being with us.